So basically what we have here is the iPath S&P GSCI crude oil total return. It's like a fund. Basically, I just wanted to give you a glimpse of this real quick to see on the weekly time frame that oil hasn't been indeed dropping, and I just did a quick Fibonacci ratio from the recent high up here down to the tip here to show you, as it retraced to 23%. The lower it retraces, or the least depth of the retracement, the stronger the trend. And as you can see, it's the lowest possible Fibonacci ratio, which indicates that bears were quick to jump on that bargain as soon as it hit the top Bollinger Band. I mean, sure enough, boom, shot off. As you can see, you got a little bit of gapping here, but for the most part, you got nothing but down candles, which basically means that bears did not take any loose, they did not let any slack happen. I mean, price got bidded down quickly, no close ups, no indifference closes. I mean, everything was a close down. Just to show you that as price drops, the Canadian dollar will get weaker, and since that's in the denominator of the USD CAD pair, that would cause that pair to be bullish. All other things being equal. Of course, you got other factors on the USD side, such as interest rates and whatnot, causing it to be bullish. So I just wanted to show you that real quickly. And jumping back over here to the daily chart on the USD CAD, I did a quick, I do Elliott wave counts, I don't do them as complete as like Daily FX or FX Street. I mean, they got them going back to the epochal level, all the way back to the beginning of like medieval times and whatnot. So I just did it to give myself a general structure, and somebody told me that many people, I've heard this before, that there's no wrong strategy. There's only a wrong discipline and a wrong money management approach. So whatever helps you get a structure, that's the best way to basically, as long as you're consistent, as long as you have tight money management. I mean, it all comes down to trying to find islands of order in a sea of chaos when it comes to this stuff. As you can see, the fractal nature, and there's no way that you could scientifically, in my opinion, do anything other than try to control certain portions of the chaotic market. And that's what I'm doing here. I have 1, 2, 3. It's a classic 5-3 with a textbook third wave that's the longest. And as you can see, I'm not doing an ABC corrections. I'm just trying to show you the structure where I feel we are. And basically, as you saw from the bowl formation in my other video, we are at a level where this is the flag in the bowl, which here's the bowl again, as you can see. And there's the flag portion that we're in. And what I want to show you real quick is, if I can get this, I believe that if you take the reciprocal basically of the 38.2 correction right here, and you do 1 divided by 0.382, it gives you the extension, and the extension calculated from here upwards actually indicates that it could make it as far as 1.40. So my higher order 0.618 Fibonacci extension at 1.35, which also serves as a psychological resistance area, is, in my opinion, a conservative target. And that's where I'm going. And as you can see, the retracement here and the fact that we're in wave 5, and I believe wave 5 might have some interim consolidations. If you do like a count here, you do like 1, 2, and then this could be a wave 3, which has waves within it. So you could have 1, 2, 3, 4, 5. So there you go. You have wave 1, 2, 3. And then we got, this could possibly be the end of a 4, and then a 4 within and then a 5 within a 4. And then this could be going on to extend to a wave 5 within a 5, on a lower time frame. And that's what I believe is that 5 that's going to project us up. And I believe this wave has another 300 to 350 pips on an absolute basis, considering the ups and downs. And this only, confirms my analysis, and that's the daily time frame, which hones in a little bit. Now, I just want to add one more thing to show you something, and if we can get some moving averages, and what I wanted to do is throw on a few of these, and I would like to put 21 make this one here a 100 SMA. I'll make the 100 a bright unmissable red, and then this one I'll make this an intermediate 55 candle simple moving average, and I'll make that one a bright blue. And as you can see, we're starting to split up here. Trend is definitely defined as the proper order have broken off here with the shorter term moving average tracking price very closely. Price is bouncing above it, and as you can see here, it's starting to come below the price just a little bit, which indicates some consolidation. Possibly, it could fall, but I think that 1.30 psych zone will serve as a solid support. If you were to run a Fibonacci ratio from the recent low upwards, I wouldn't be surprised if that 1.30 is around a 0.382 Fibonacci retracement level, which we'll hone into here shortly.